Welcome to Markets Now. I'm Michelle, work with Bryan Doherty, Total Farm Marketing. Well, it was an up day in everything but the cattle market. And Brian, let's talk about the grains. We had a really nice rally and response across the board, even soybeans, which didn't have the best technical close yesterday. So where'd the rally come from? Was it fundamental or just all technical?
Both. So I think on the technical side, we pushed out to support levels. The 50-day moving average seemed to run out of selling interest in corn, and all of a sudden the buyers came in. Same thing as soybeans late in the day. You've got an energy complex that continues to roll higher. We think that's longer term supportive from the energy complex side, and then you've got tensions in the Middle East. You've got talk of India continuing to issue that they'll be importing some wheat. They'll have a record crop, it looks like, but they've been drawn down on their inventories. Food inflation is a major concern within India, so exportable wheat remains somewhat tight, yet wheat prices languish near their lows. There just isn't a lot of appetite to sell here. We're hearing from farmers this week that they were not interested in selling unless basis did some heavy lifting or the market rebounded. So I think that's also in part here. And then the trade, when you look at that 400 rounded about 400 million bushel disappearance in corn on last Thursday's stocks and acreage report, can't help but be a little supportive there. We just need to see something else, some other catalyst to kick it a little bit harder and get serious short covering. That'll have to come likely in the form of weather concerns.
Yeah. And I guess my question is, do the funds want to be as short as they are going into our growing or our planting season with still a lot of uncertainty?
I think money's always looking for value, and corn right now is value. You've got to grow a crop. Two-thirds of the world's crop is northern hemisphere produced. Big chunk of it's in safrinha corn in Brazil, yet to be have to grow it yet, and yet have to harvest it. So you've got that uncertainty. But when you look at some of these other markets like cocoa and energies, and even cattle as of late, some of these really big gold markets that have just moved higher, and then you look at the equity market, which posted a major bearish key reversal here just a couple of sessions ago. I got to think that the money flow might start to move out of some of these other commodities and look for value. And now you're heading into the uncertain season with crop production.
Yeah. Did the pullback in the dollar also help maybe boost the grains? I know Fed Chairman Powell had a few stories out on Wednesday talking about, that they do think that interest rates are going to start coming down. And it seemed like the dollar maybe pulled back on that.
It did, and the dollars, all else being equal, it's the swing vote, and if the dollar has some decline, the market will quickly look at that, especially this time of the year where you start looking at potential for some planting delays or too dry in areas, and you create this environment that all of the uncertainty with producing northern hemisphere crops is still yet ahead of the marketplace. So the dollar is the swing vote, but I don't know if that alone is enough. End users still look at an adequate supply, so they're going to be comfortable buyers, but I think they're ready to move in a bigger way. What would be interesting to see is if the speculative interest can really start to get, something to sink its teeth into. And they've got a little bite as of last week in the corn market and soybeans. Adequate carry out right now, but that can change in a heartbeat depending on weather as well.
Yeah. From a technical standpoint, do you think we can build on today's rally in the grains?
I think time will have to tell us that. I think we can. I mean, it was an encouraging turnaround. It looked pretty blasé this morning. Things look like they're kind of ready to kind of capitulate and head lower again. But you got to have the fundamental backdrop for that. And I don't know if we've got that in the corn market right now. Farmers, when weather's better, they're going to head to the field. It's going to take some basis improvement to get things, pulled out of farmers' hands in the next several weeks. Big picture, though, we still worry about the larger carryout and whether that's enough to get this market really turned. So we got bullish news under our belt now, but I don't think we've turned the corner. I don't think it's a game changer, but it's certainly something to be respected. The bears will argue that, hey, we still have to count for acres, and the June acreage report is where the rubber hits the road, not necessarily the March report.
Yeah. Cattle market, as I said, was the one that pulled back here today. And again, we follow these HPAI headlines. There's some uncertainty in the market. Does that create a funds sell every rally mentality now?
I think it could. That's what we have to watch out for. But look for divergent fundamentals. If the general public isn't overly concerned and time passes, these kind of things have a tendency to sort of come and go. So as these let's say developments start hitting hitting the news wires over the next 10 days or so. Is this spreading? Is it a major concern? Consumers have a tendency to react on a lot of times not good information. They just react. So if they think, oh, this beef or this poultry, I don't want to eat any of this right now, that's a concern. Look at the volatility in the cattle complex the last 48 hours. It's telling you both the bulls and bears are tugging here and trying to establish either oversold conditions compared to the cash market or ideas that the cash market is going to start coming down because consumer demand is going to sway away from the market. There's no strong evidence of that yet.
Yeah. Cash market has been holding together, though. If it continues to do that, you've got futures at a discount. That should be somewhat supportive, shouldn't it?
It should be supportive, and I'd like to think that the trade's going to buy into the bigger picture fundamentals that look, we just have a limited supply. And you and I've talked about this over and over again. It's not so much that we don't know the supply side, we know that's limited. It's whether the economy can allow consumers to continue to, let's say, chase higher prices or pay higher
Yeah.
value. That is my bigger concern there. We've heard this is steak the new lobster? Well, people are going to buy it that can afford it, but others aren't going to buy it at all because they can't afford it. Economic conditions matter a lot. Higher energy prices do not help when gas prices are as high as they are at the pump. So that's a concern for the dairy, but certainly the beef industry.
Let's talk about dairy. How have milk markets reacted to the HPAI news? I know they have not been as volatile, but they've been drifting lower, haven't they?
They've drifted lower and they haven't reacted to it at all. One might think, but boy, this is a concern for the dairy herds. It's been in dairy herds. This is going to limit milk supply. Let's get
Yeah.
milk bought. We don't see any of that. The cheese market continues to languish. It's as though the market doesn't really know what to do with this. So we go back to the same old right now, which is that underlying sluggish demand, both internally and on the export front. 2023 was not a good year for exports in the dairy industry as compared to 22. So we carry that supply. We've got a herd that isn't contracting quick enough. But big picture, you can't help but be supportive when you look at the idea that if grain prices are bottoming, which that could be, and if you look at where the supply of dairy heifers is going to come from, it has to come from, dairy cows. And right now, the beef calves are bringing more. So big picture, I think the market is set up for a fine recovery, but we've got to have the demand lead the way higher. We've got to have some interest in this cheese complex to push the market upward.
Yeah. And we had over a $2 slide from what, mid to late February into March, the way it was, right?
Yeah, and what bothers me more about that is the speed of the slide, how quickly it can erode, and
Okay.
that's generally not a sign of a market that's ready to make a bull run. That is, when we see that happen, it doesn't matter if it's corn or beans or wheat or dairy or live cattle. When you get a quick precipitous drive lower without hardly any bounce, that's just a general concern that you don't have that demand underlying the market that creates that speculative interest or just end user buying, and that's our concern at this point. The dairy industry is just languishing. Hopefully we can see the market respond to good value. This is as good a value as the consumers had for 3 years.
Yeah, let's hope that can turn things around. Thanks, Brian. Bryan Doherty with Total Farm Marketing. That is Markets Now.